Hello and welcome to another update video about the DXY. So it looks like the DXY has started that wave 2 corrective rally that we talked about a week ago in the last video. Not only a week ago, I think we talked about already a few weeks ago when the price was nearing a low point down here. And in the last video, I gave you the resistance area or target area for this circle wave 2 corrective rally. And I think I gave you an initial level that needed to break to confirm that this wave 2 is starting. That would have broken, so I can't remember which level that was. Probably it was around here, $101.82. But anyway, the rally seems to be unfolding. The wave 2 seems to have started. I mean, maybe it's already complete, but I would rather like to see a more of a pronounced wave 2. And we've been looking for this rally as part of our primary scenario. There was another accelerated downside count that I showed you in the last video as well, in case we break below the red line and below the circle wave 1 low, but that was not needed. That did not have to be activated. So we stay with our primary scenario, which suggests that we've seen 5 waves down from the October highs. That pretty much worked according to plan. All the way up here, already highlighted to you that we are looking for a much deeper, or that we're already looking for the C wave to the downside. Actually, a lot of you will know that who've been watching the videos over the recent months. Now, this 5 wave move is obviously done. That's why I gave you the target or resistance area for wave 2. Now, if we look at the time, I mean, this wave 1 started on the 3rd of October and probably finished, well, end of December. So basically nearly 3 months. So that would indicate that this wave 2 is unlikely going to be finished within a few days. So what I will do, I'm gonna space this out a little bit. The wave 2 retrace is like, if it's a wave 2, it's likely going to take a little longer. So it already reacted here to the resistance area, the initial resistance level, but I would prefer that it takes a little bit more time, at least a few weeks, and it would most likely unfold as an ABC structure. So let me put that onto the chart. But this was already the ideal level where an A wave could finish. Okay, oftentimes the A wave of a wave 2 finishes around the 38.2 retracement of wave 1. Can go a little higher, so the 50% level is another target for the A wave, but then typically a B wave should start. So such a wave 2 oftentimes unfolds as an ABC structure. That's what I would track initially. And as I said, the A wave might be done. Looking for a B wave. So what's support now? Because if maybe in the next week or so, the B wave pullback starts, we need to see, or we need to have a level to watch, a support box to watch. And it would be the area between the 50% and the 78.6 retracement level. So between $101.88 and $101.17. See, that 50% level was nearly reached already. We had a key or a strong reaction here to that 38.2 retracement. So as long as, and that's important, as long as the $101.17 level, 17 cent level is not broken and the price does not, or the value does not sustain below it, I would be watching for a C wave higher. And then we can get this more pronounced ABC structure that can take a few weeks to play out, especially if the C wave is an ending diagonal. It can take forever. So that would all go along very well with the scenario on the SPX that we've been discussing in the videos and that we talk about on a daily basis in the membership, that we could get a more pronounced B wave pullback. It would be very much in line with this idea. Now, the thing is though, if we get here a break, a sustained break below $101.17, then probably something on this chart more bearish is playing out and we're heading down more directly. Remember that the forecast is that over the coming weeks, months, probably the first half of the year or so, we are moving down into the low $90 region. That's the forecast, as long as, and there's always a condition, because every professional TA needs a level that you know where it's probably going to fail, that TA. That's the 78.6 retrace of the move to the downside. So if we get a sustained break above $105.88, but obviously I will cover that in the daily videos anyway, not daily videos, in the regular videos here of the DXY. that would indicate that something here on the DXY more bullish is playing out. That would be a warning also for the S&P 500, because this would indicate a much stronger rally, possibly into the $110, $111 region in, first of all, a more extended B wave. But that is at the moment not what I'm primarily watching for. For me, the question is about, okay, how high, how strong is this wave 2 now going to be? And are we actually in discount, which would be further confirmed if the price or the value can hold support here in the orange support zone and then rally in a C wave. But if we break down more directly, I would need to assess the structure to see, okay, was this really a wave 2 or is it a more aggressively bearish count scenario? Yeah, which again, you know, would have to be activated with the break below the wave 1 low. Obviously, a break below support will be the first warning, but a break below the wave 1 low at $100.65 will be the invalidation point for a still unfolding wave 2 rally. That's my update about the DXY. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. If you're interested in daily updates about the S&P 500 as well as regular updates about stocks, check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.